the Central Bank Governor Gordon Emefiele announcing the considerations and decisions of the Monetary Policy Committee meeting. And as widely expected, the MPC did decide to hold its key parameters unchanged as expected by most of the markets. Of course, the Q&A session that followed the announcement perhaps attracts a lot more attention, as you could say that the central bank dropped another set of bombshells relating to the forex market. A big focus on an investigation into a website that publishes foreign exchange rates, abokifx.com, obviously attracting a lot of interest there. But clearly the central bank's increasing its surveillance of the foreign exchange markets as we see that weakness of the Naira in the parallel market to an all-time low. Of course, I still have my guests joining me to give us some perspective on the markets. Bismarck Rowani, the CEO of Financial Derivatives, is still standing by. We also have Andrew Nevin, the Chief Economist at PwC Nigeria, and Nnamdi Wizu, Co-Managing Partner at Commercial Partners. Gentlemen, let's hear your thoughts and take it very quickly. Starting with you, Bismarck, your reaction to the decision and, of course, the Q&A session that followed.
Well, I think, like I said, at this time, what has happened, the primary objective of the Monetary Policy Committee is about inflation on price level. I think that got deflected by the discussion on the power market and the website. But the most important thing is that inflation is moderating at a rate slower than at which the GDP is growing. Money supply is also growing at a rate faster than output is growing. Therefore, there are still inflationary pressures. However, if output continues to grow, then we are likely to see this moderation in inflation continue. So I wasn't surprised that they held, but at a point in time, the money supply saturation is going to feed into prices.
All right. But it sounds like you're not really focusing too much on the conversation around the forex markets. I imagine that was a big focus for a lot of people viewing the broadcast. And what do you make of the increased surveillance that we're seeing of the markets by the central bank?
Well, quite frankly, market structure and market demand and supply balance are two things. If you've changed the structure because the intermediaries, which are the BDCs, and then the price discovery mechanism of the website and all, those are things that make markets efficient. If an efficient market is going to lead to some illegality, then that's something that has to be dealt with outside the realms of policy. That is regulation and enforcement. But monetary policy should focus on what will the impact of these changes be on price level, on output, on people's savings function and investment function.
Right.
I think that's what the focus will be. I don't think the deflection as to how to deal with sabotage or speculation and all that is as important as what's the main goal of monetary policy and what is the outcome of this meeting.
Well, I hear what you're saying in terms of the focus of monetary policy, but Nnamdi, let's hear your reaction to some of the conversations or rather some of the responses of the central bank governor to those questions around the foreign exchange market. You on this approach to increased surveillance of the market, what do you think is the likely outcome? How is that going to influence behavior?
Well, definitely, I think that a lot of people become more cautious, and most likely find people who were patronizing some of these markets decide to take their hands off the trigger and wait and see how things evolve. The truth about it is that you have the 44, 45 brand items which have been told to source funds from the autonomous market. And, those items keep finding their ways into the country somehow. So, which definitely means that these people are going to continue buying monies from the power market or the black markets. And somehow they would want to have their own price discovery. I understand where, to some extent, where the central bank's concern to be around having one firm publishing rates. I mean, if you look at how the likes of LIBOR and Co. are typically published in developed countries, you would have people take rates from the body set up and take rates from different people to collate it all and then end up publishing those rates. So it's good to see, really interested in seeing if there's a response from first of all on the KFX But secondly, I think that the major thing still remains liquidity in the market. Because if you had liquidity in the market, then there wouldn't be any need for people to follow book FX in the first place. So I think this is still a big challenge that Nigeria is facing. It's to some extent, the central banks are tied with regards to providing liquidity to the market. Even if you just look at crude oil production, we're at about 1.2 million barrels per day versus similar OPEC quota of 1.4, which is also a far cry from our regular 2.1 million or thereabout barrels per day. So that even tells you that FX receipts have really, really crashed, and we're feeling the impact of the COVID-induced, crude oil price reduction and all. So until those issues are resolved, I don't really see how things are really going to pick up that much in the FX market.
All right, but a quick view on this. So you mentioned that at one point we've got to see a lot more supply, but could this be a case of the central bank being systematic, trying to address the problems with the nature of the market right now to ensure that there are no leakages, to deal with people who are fraudulently buying or selling foreign exchange? Could it be a systematic approach? And perhaps the thinking is try and address all these issues and then bring the supply and let the market work as it should. And in fact, maybe I'll add this question. Would you agree that the markets are due for at least some reform in terms of how dollar cash is handled, transfers and so forth?
I mean, definitely, I believe that we're due for some major reform. What you see now also is that a lot of people seem to tend towards more dollar-type products versus or investment options versus Naira investment options, because everybody is worried. So the question would be how to try and get people to more or less build their confidence once again in the Naira. I mean, naturally, the easiest way to do that is to ensure that you have stability in currency. So if you can look at the period, say, from around like 2009, 2008, where you had some bit of stability in currency, you didn't see people all scrambling and looking for FX-type, dollar-type transaction, dollar-type investment. So I think it's something that's definitely it's due, but the major thing will still be we need to increase dollar receipts in the country.
Right.
And then when that happens, then we can now ensure that we have more liquidity coming in. And then whatever reforms you decide to take or embark on will be a lot more effective than right now.
All right. Andrew, I'd like you to chime in here. And would you say that we're moving closer to, if you like, the type of South Africa type and several other countries where we know there are significant exchange controls? Do you see Nigeria moving in that direction? And if that is the case, what do you think would be the cost or the benefit of that?
Well, I mean, we've always advocated having a unified exchange rate, so I hope we're not moving that way. And we've seen steps in this direction. I mean, the ERGP, which was published in 2015, the Economic Recovery and Growth Plan, was very clear we were meant to move to market-determined exchange rates. The ID window was a step. We just haven't kind of taken the full step. And I think with some of the events of the world and COVID upsetting the economy, and particularly, I think, as Bismarck said, speculation of that the Naira is going to further depreciate is kind of feeding on itself right now. But as Nnamdi says, I mean, fundamentally, we need more dollars in the economy, and we're not going to produce all the things we need. No country does on that. So, as I said, let's focus on increasing the diaspora remittances. The other thing I think we can focus on to stabilize the economy is you might have read in Nairametrics, I mean, the amount that's being spent, at least visibly, on healthcare and education outside of the country, they have the number 3 billion. I'm sure with the invisible sort of transactions, it's probably 4 or 5 billion a year. To me, that's the number one import substitution, food and health and education, which basically means if we can develop the education system here and develop the healthcare system here, those imports of foreign healthcare and foreign education won't be as necessary. So all of those things would help to kind of bring it more into an FX balance. But I mean, I think that, certainly the governor is focused on illegal activities, saying that you bringing in a fake visa and then taking the dollars in the current situation has to be kind of a criminal act. So it's good to see they're cracking down on it. I think the Aboki FX is a very interesting question. I mean, we all read a book EFX without asking what's the fundamental source of the data. And something like LIBOR, I mean, you had criminals setting LIBOR, which set the rates for trillions of dollars of securities around the world. So I think it's a very good question to be asking, what is the actual rate? Because you do need some price discovery.
All right. Bismarck, I want to come back to you. As you know, the next big focus will be the Eurobond sale. I do understand that some meetings, virtual meetings, are already happening from today. There will be more on Monday. And it is still related to this foreign exchange issue because, as you know, the government is hoping to raise as much as $6 billion from that transaction. What are your thoughts on the impact of that on this whole conversation around the Naira stability?
I think efficient market hypothesis would suggest that what the governor was talking about mainly was retail, people buying tickets and 50 tickets and all of that. The bulk of Nigerian foreign exchange transactions are done for equipment, machinery, raw materials and all of that, and in the wholesale and the corporate market. I think to a large extent it's a distraction to policymakers to focus so much on the retail, apart from the speculative and the sabotage part of things. The big picture is that if you increase the supply into the official market, the power market or the autonomous market will disappear. There was a time for about 3-4 years where the power market was at 362 and the official market was at 359. You use your Naira card anywhere in the world, it eventually became a convertible currency. But then the results were there. But if the focus is on providing raw materials, corporate utilization, if you increase that corporate utilization, you by nature finish and you actually extinguish the power market. The rates will unite and things will happen. So it's one of the conditions for the Eurobond issue will probably be to see some kind of sanity, some kind of convergence, some kind of unification of rates. And quite frankly, I think that will come the moment we can increase the supply into the official market. And at the same time, allow the I&E window rate move. The I&E window rate cannot be static at 4.11, 4.12. Because there's no foreign exchange market or no foreign exchange rate in the world that stays within a band of 0.5% or something for 3-4 years. That rate has to move. And so adopting the crawling peg strategy to actually bring some alignment and equilibrium into the foreign exchange market and reduce the distortions will be the final answer to this problem.
Right. But Nnamdi, bring us into that I&E window market and just help us appreciate the demand and supply dynamics right now and the pricing. We know obviously the central bank continues to intervene in that market, but from what you can see, how is the demand and supply dynamic working out there right now?
Well, from what we've seen, central banks is setting roughly about 500 million monthly to the locals. If you look at it, we're looking at what our import bill is. Import bill roughly about 50 billion, so it's estimated that you have about 4 billion demand a month. We have the central bank selling maybe roughly about 500 million monthly, apart from what they're also selling into the offshore investors also. So we continue to see reduced volumes being traded in the I&E window. Volumes continue to drop. We continue to see the spread widen between I&E window and the power market, and we also continue to see a reduction in FPI generally, which naturally feeds into the I&E window. So if you had to look at, say, volumes in FPI volumes in 2019, maybe we are roughly about 16 billion, right? Versus 2020, where you were about 5 billion, and 2021 to date, we are less than 2 billion. So if you look at that, that basically explains why you have quite a bit of a drop in the I&E window. Totally explains that.
Right. All right. I'll give you the final word, Andrew, as we wrap things up. Your final thoughts on this meeting and, in a sense, what do you think happens next now that we're hitting the road for the Eurobond issue?
Well, let me say, I mean, as I've expressed before, I'm actually very optimistic in the medium term. But I said pre the governor speaking that I was very interested in what he was saying about the overall economy. I think the best analogy is that in most countries, the CBN governor is the race car driver. So other people build the race car, and then you try to have a governor or a central bank that drives the race car as well as possible. But in Nigeria, the central bank is not only the driver of the race car, but it's building the race car in real time. And when you look at the issues that the governor raised, I mean, I think, Walla, you were the one that interviewed His Royal Highness Mohammed Sanusi II in Calabar in 2013, and you asked him, why are you doing all these interventions? And he said, well, if not us, who? If not now, when? And I think that's continued to be the thing about the Central Bank of Nigeria. It is really on the cutting edge of doing things. I mean, you might not necessarily agree with kind of the way programs are structured, but they're putting them on the map. They put agriculture on the map. They now have the new InfraCo. They set up AMCON. They're now coming out with the central bank digital currency. I mean, we'll be the first large country to have something like that. You heard the governor say that this is a journey. It's going to bring down payment costs for the bottom of the pyramid. They're focused on financial inclusion. They're looking at critical sectors. So they're really trying to kind of be the leader in the economy, not just if you look at a country like Canada, for example, the central bank isn't even the regulator. The central bank just does the monetary policy. But here we have a central bank that's the regulator, that does the monetary policy, right, as we've talked about today, but also takes real ownership of many pieces of the economy. 10, 15 years from now, I hope other organizations, institutions have emerged. But right now, the Central Bank of Nigeria is the key actor in driving the economy and the society forward in this country.
All right, let's leave it there. I mean, my big takeaway is I think there's surveillance and more surveillance coming. Gentlemen, it's been a pleasure. Thank you so much for your time. That's where we wrap things up for our coverage of the 5th Nigeria MPC meeting. A big thank you to my guests again, Bismarck Uwani, the CEO of Financial Derivatives and member of the Presidential Economic Advisory Council, Andrew Nevin, Chief Economist at PwC Nigeria, and Nambi Wizu, Co-Managing Partner at Commercial Partners. Earlier, we did have Mansour Ahmed, the President of the Manufacturers Association of Nigeria. Many thanks for joining us. Up next is Closing Bell.